Hello, everybody. Thank you for joining us for our Mortgage Minute with the Mortgage Minds. I'm Alex Ward, broker owner of Maxwell Devonshire Realty, and I'm joined today by two amazing mortgage brokers. We have Diana Lee, mortgage brokerage owner, and we have Megan Wendell, a mortgage associate extraordinaire. They are here today and will be part of a six-part series where they'll be going over a variety of topics that will help you not only as a home buyer, but also as a real estate professional have a greater understanding of what's involved in the mortgage process so that you can give better, I won't say advice because you're not licensed, but just a better understanding and have a great direction to put your clients. So I've already talked way too much. The floor is yours, ladies. Let's go.
Thank you so much. Thanks, Alex. Thanks, Maxwell, for having us. Just a little introduction about myself. My name is Diana Lee. I'm a mortgage broker and the proud owner of the Mortgage Minds here in Edmonton. We've been established for almost 15 years, and prior to me opening up the brokerage, I was with TD for about 15 years too. So very experienced. We have a team of 10 brokers, and I would say combined between all of us, gosh, we probably have more than 130 years of experience. We're all, most of us are ex-bankers, ex-financials, or financial planners, I should say, or just in the industry for a long time. So thank you for having us. I'm excited to be here. And this is Megan Wendell.
Hi, I'm Megan Wendell. I'm a mortgage consultant with the Mortgage Minds. I make up a small portion of that 130 years. I know I look very young. Um, I've been in the industry about 10 years, so long enough to have tried a little bit of everything, but also to still have some enthusiasm and excitement about around mortgages. I belong to this absolutely outstanding team who support all of the things that come along with mortgages, and I'm so grateful for the opportunity to be here.
Yeah, we were talking about things that we're seeing in the market and things that we're talking to our clients with every day. And, there's a need to talk about these things and to have open conversation and, share some of the tips and tricks or even concerns that we're hearing and share with our fellow colleagues in our industry so we can all work together and have a better experience for our customers, our clients, our homeowners, right? Our families that we get to serve every single day. So, this is kind of why we wanted to jump on and share some things that we're seeing and common questions that we're getting right now, actually, over the last few years in our specific market of Edmonton and surrounding areas, is which where we all are. So, and of course, any other city too in Alberta, really. We're licensed here. So I want to talk about that with you, Megan, and with everyone. And of course, feel free to raise your hand, ask questions. We're happy to have an open dialogue about any scenario that you guys are coming upon, or concerns or questions, or what you are also seeing. So please feel free to jump into that chat room anytime. But Megs, what are you seeing here? What are we seeing here? What are we hearing?
So I'm sure many of you are also noticing that we're in a position where the transactions aren't always as cut and dry or as smooth as they may have been in the past. We are finding that there's some different hurdles that we're approaching. And us as mortgage brokers, we are in a really great position to be able to help set you up for success in terms of creating a strategy for your buyers and your sellers in the current market that we're facing. Part of that strategy is dual property qualification. Can it be done? So we take a look at what we're currently, any client that's in front of us, we take a look at their current situation to see what the possibility is of if they currently own a property, if they can qualify for a new mortgage while still holding onto that property. In an ideal situation, that's the way we would go. We would just go ahead with the buy and have the sale just kind of sitting there waiting for the opportune moment. But we all know that that's not common practice. That's not the current circumstances. So we look at other strategies to be able to still hold on to that property potentially as a rental and then proceed with the purchase as well. Diana?
Yeah. And like that's the key word is strategy. You know what I mean? Like we often get these calls and the first question is rate or hey, I found a house. And they kind of lead with this question that it's like, okay, yeah, we definitely can get there, but let's just take a moment. Let's ask you a few questions because we have to run it in our head and sorry, lay it out as to strategies, best case scenario, worst case scenario, timing, quick close, do they have, is all their down payment deposit even tied up in the equity? What's the extra cash flow? Like there's so much more that comes in. And that's where that call and that conversation is so key because our conversation and our result has to be to have a proper strategy with the clients and also communicate with the real estate agents and just this team that we work together every day to make sure it properly pans out. And that is where, how many times have people gotten a call and been like, I found the house. This is it. I'm going to buy it. And you're like, wait a second. And we have to kind of figure out all of the little details that come along with that approval. So these are the things that we are really excited to talk to clients about. It is exciting because as soon as we kind of look at both scenarios and say, wait a second, you can buy this, make an offer on this house, and you don't have the stress of having that sale as a condition. And we all know what that would mean in, your purchasing power and your negotiations when you're making that offer. And so I think that that really is key for us and to talk about those types of things. And it's exciting to set that up with clients. And let's dive into like what those three strategies could be and how we can position that for the client. And then we can share that with you guys and to see if that works out. Go ahead.
Okay, so I kind of touched on it before, but dual property qualification. So when you have a client that's looking to, or they've already found the house that they want, but they still need to sell their existing, um, like I said, if timing lines up, great. If it doesn't, though, then we look into the notion of them being able to qualify using their current home as an existing rental and holding on to it as a rental, and then proceeding with the purchase. That policy is not standardized across our industry. Many different lenders have different policies on how much rental income can be used as contributory income to help your client qualify. Working with an established mortgage broker who has the experience to be able to navigate that is really key. Some will let us only use 50% of the income that could potentially be generated. Others, it's more, depending on the circumstances. And some of it, the nuances that will allow you to be able to have that buyer still qualify for that property.
So that's exactly it. So, I mean, that's strategy number one, right? You have an existing house, you could potentially rent that out and keep that property under like the application, and then we're purchasing the other property. In that scenario, of course, we have to talk about when you're purchasing this house as an owner occupied, you could put a minimum down of 5%. Where's that going to come from? It can come from gift or your savings or other things. And also, just part of that one little scenario is we could also look at extracting some equity of this existing house if you qualify income to carrying all the debt and using that equity as the down payment on the new and then therefore qualifying on both. And so there's so many little things that we can play around with. And I think what's key here is that when we are in these scenarios, we have access to so many lenders that allow us to do little different things here on the existing house if we have to rely on that rental income and how we can help that client qualify for more. Whereas, often some of these, like a bank might have a strict policy and it's this, and this is the only percentage, and which could ultimately affect your purchasing power, right? So that's strategy number one. Another strategy is fairly riskier, but I mean, it does happen. So this is where I'm seeing a few things coming in. This is where a clear conversation has to be a plan in action and full understanding by all parties. And I don't recommend it by all, but it is a possibility. So you find a house that you absolutely love and you want to buy it and you know it's your dream house and this is it. You can make an offer on it. And of course, we're going to make the offer as strong as possible. There might not be a subject to sale. We would still proceed as a regular purchase, but we have to look at it as a worst case scenario. What if this house doesn't sell? I know the intention might be to sell, but that's where part of the strategic planning in the beginning is we would look at making the offer, still subject to conditioning and financing, whatever the standard are. But I would actually talk to a cosigner or something in the back end just to make sure I actually have everything ready to go if we ever land in that worst case scenario. And that would work in a scenario when you make an offer and you kind of have like 60 or more days for that possession. I would say, because the reason why is I would get you approved to qualify to purchase with the cosigner and actually like talk to the cosigner. And I mean, we like to take these steps right up front so there's no surprises in the end. And we then can get the worst case scenario approved. So number one, you can get approved with the cosigner right off the bat and carry the existing house. The lenders would feel comfortable with that scenario. The other option is you could have subject to sale. I'm sorry, make get approved as per normal, and perhaps you waive your conditions, but you know a pending sale is like right behind it. Of course, if that pending sale comes, sooner than later, and we feel comfortable that you're getting closer to possession, then we have no problem because you have a sale in hand. But the reality is that I would only put someone in that position if we had a cosigner on hand, ready to go. Because we're not going to go last minute on the tail end of the last 10 days before closing without that cosigner ready to go. We would do it kind of in the beginning because this is part of the strategic planning to make sure that we look at best case, worst case, middle case for all of our home buyers. So that's kind of a different scenario as well that we often look at, just making sure we're prepared. Um, and then, of course, purchase, don't even have a rental. If you have enough income and you have a low mortgage payment here, or perhaps a home equity line of credit, there's ways we can look at minimizing the monthly obligations tied to this property, and you simply just qualify for both, right? I have had a few scenarios where a client has been pre-approved, and it's just easier for the person who gave them the pre-approval to say, "Oh yeah, you're approved, subject to sale." Right? That's just how they submit the pre-approval. Or maybe it was just a conversation. It's not really actually a real pre-approval. And so sometimes, we assume the homeowners know more, but they sometimes just hear that and go, "Oh, I have to sell." Right? But what an experience it is for the customer journey to have a really good conversation, to have the peace of mind, and then on the flip side, for our partners to have that strong offer going in, you know, builds up that negotiating power.
Ultimately, it all this strategy, whatever that might be, comes down to really effective communication on both sides and making sure that the client is covered no matter what in the end. And that also reflects on your transaction with them as well. Being able to collaborate with trusted professionals in the industry to have these conversations to make sure that there's not just one strategy moving forward, that there are multiple plays in place and all of those have been worked out ahead of time is kind of ideal for everyone involved.
Yeah. It's just simply in today's market, things are complicated. Like at the end of
Yeah.
the day, things are complicated. Things are a lot more work than maybe they used to be 10 years ago. There's a lot of heightened emotions, there's a lot of time pressures. And we're dealing with, the market volatility, right? So we've got to move and we've got to have those conversations earlier in the beginning, as soon as the call is made. Um, I do also think it actually matters the relationship that person, whether it's the banker or the broker, what kind of relationship do they have with the lender they're working with on the tail end? Because if there's all these little changes throughout the process right before closing, and this is kind of the game we're playing, you want to make sure that that relationship with whoever your middleman is, so us as the broker, can communicate quickly to the lender because sometimes you do need a quick change within a day or two. And I think that matters for everything to go smoothly for the client in the end. Because let's be honest, we are all in this together, right? So when something drops here or something drops there, we are a team collectively, whether we know each other or not. Our priority is to have a smooth journey for this client, get them excited, get them in that house of their dreams, build their family memories, and do what's right for them.
Yeah. No, that's all been fantastic information. Thanks so much, Diana and Megan. I do have a couple of questions. When
Hmm.
you're kind of looking at carrying both properties, but you're still taking the equity out on one, is there some other ways of still doing it, but still keeping that second property? Like you're using the down payment from the existing house from the equity portion
Yeah.
for the down payment on the second house, and you're
Yeah.
planning on keeping it. What are kind of the buyer's options for that?
I'm actually doing like I think two of those right now. So that's where the conversation of the pre-approval is key because I've had like a few clients call me and be like, "Listen, I'm thinking of selling my house or buying in the future," and we're just kind of talking about all these future plans, right? Because people, they want to know what do we need to get done. So in talking with people and customers and families, we want to know, well, how much equity do you have? And of course, rising property values in the city, the equity is there. So funny enough, I have two families. They're looking to buy maybe next year, and they don't know if they want to sell their existing house, but they actually kind of want to contemplate keeping as a rental. As of today, when we're talking, this is their principal residence that they're living in. We are extracting equity out of that property today, whether it be a refinance on their whole new mortgage because they're coming up for maturity. Honestly, along with taking out their equity, they probably might have like 10 grand on a credit card that they want to pay off. So we're kind of doing like a refinance on their existing house. And then they can pull out the equity in a form of refinancing the mortgage or a home equity line of credit and getting it ready. And then simply, they'll probably go through the holiday season and guaranteed in the spring or February, I bet, they're going to start shopping. And why we do that today is because then they are in a position where I've already looked at their income. Now they can qualify on this brand new mortgage payment, plus perhaps maxing out their equity. And how much can they now qualify on the new? Now, my scenario right there is to say, but if you did keep it as a rental, now we can add a little bit of rental income. And how you can do that is we can order something called a market rent, where we can say, you know what, once you guys rent this house, easily you can rent it out for 2 grand. So then we take that rental income in that application, and I'm creating a pre-approval in the spring based on exactly what we just set them up with here. So that's actually done quite commonly.
And how does it work for bridge loans? So they do have to sell, but the sale is occurring after possession. And again, they're using that equity within the home to be able to purchase that new home. What is a bridge loan? How does it work? Who facilitates it?
So a bridge loan is more or less exactly what it explains. It's a bridge. It's a bridge between your existing property and the new property that you're purchasing. It is the down payment funds that you would be using from that existing property to put towards that new purchase. That bridge loan can be set up depending on your lender. It can be set up at the time of originating your mortgage application. So it can be very, very smooth throughout the process of putting that in place at the time of your mortgage commitment, so that when you go to close on your new home, if that possession date is prior to the sale of your existing property, as long as that firm sale is in place, your solicitor will facilitate the trust of those funds to be able to put towards the down payment and making sure that the lender receives that down payment on the other end. So it's
So
a short-term loan, yeah, short-term loan to be able to bridge that time frame.
But you do need a firm sale and a purchase. So we
Yes.
do need to see that the sale is happening because the solicitor has to confirm that they're going to pay off the mortgage and pay back the bridge upon a firm sale. So here's something that, so of course, like, you want to take keys into the new possession of the house and then, move everything and then clean that house. It's very common. But every lender has a different fee, a process, interest rate. Some are difficult to be honest that we don't
Yeah.
really deal with, and some are easy. No, it's just like an email, boom, done, it's done, and then it goes off to the lawyer. Like, how easy is that for the client versus the customer also stressing about their mortgage approval but also have to deal with a bridge? Sometimes it happens, so we would be very upfront with that client, but communication is key. So it does happen. I just want to make a point on a bridge loan for someone who is someone like a senior, I guess you could say. I do get this a lot. We have a lot of seniors downsizing where they've got an existing house free and clear, 400,000. Their intention is to sell it and they need to move into a $200,000 condo. That is something we cannot do a bridge on because there's no sale. I know it's coming, but often that one, I mean, we do have access to bridges, but it might not be the best fit for a senior type client. It's still worth a conversation to guide them. But this is the beauty. In that specific scenario, a conversation, we would love to talk to them because we want to make sure they're getting the right advice, whether it means to go back to their bank, perhaps to get a demand loan. there are certain things that we would probably advise the client. So that I do get calls for a bridge loan, but we don't do that particular scenario. A bridge loan for our end is absolutely for a firm sale and a firm purchase.
And one of the other tools that we can use in that situation also is reverse mortgage. So reverse mortgage can be used depending on the time frame that's there to pull some of that equity out in order to proceed with the other property. While if you're downsizing, anyone who's moved to senior knows that it is an emotional process. They need some time to be able to work through things in order to get in there. This kind of gives some grace with a longer time period of holding both properties for a little while, if that's possible.
And I'm so glad you when we get to the end of this here with that topic. That is going to be a topic we're going to be bringing up in one of the next few series coming up is strictly just reverse mortgages. It is a huge niche out there. Something that's kind of actually untapped, but out there, and it's building huge traction right now. And I'll just touch on it really quick, but it is catered to seniors of a certain age and older. But that scenario I just talked about the bridge. Yes, I just talked about the bridge in that one scenario. But what's happening is, seniors they do have a property with a lot of equity. They do need something to bridge them so often to get to the next property. If reverse mortgage is a proper fit for them, we do have a product where we can get them into the next house, securing the other house until it's sold. Like there's ways you can kind of put a blanket security on two properties to help them move. But again, that's where the conversation is key in the beginning so we can really assess, wait a second, you don't need that, or you do need that. We're not going to do that for someone who doesn't need it, right? We're not going to give them that advice. But it is it is up there and it's available and it's actually used quite widely right now.
What I'm hearing you say is that it's good to plan early and get proper advice early on in the process before making a last minute decision. Don't have you be the last part where you're trying to throw it together at the very end once you've already made the decision that you're going out to buy. Be brought in early, make sure you create a plan, especially if you are thinking about downsizing or upsizing or even that first purchase, right? So how does it look like? What's going to be important to you? Is your income here, but it's going to be growing there? What makes a lot of sense? Does waiting make more sense? Does doing it now? But getting that right advice.
Yes. And ultimately, we are like I said, we're a team, whether we know each other or not. So if you're on one side of the transaction, who are you working with on the other? Get to know the person that is helping your client. Call them, pick them up, pick them up, pick up the phone. You can pick them up, take them out for coffee too.
Yeah.
Like that is so key. And I think, yes, planning, having the conversation, having strategies, all of this cohesively it just makes a better experience for everyone.
So with that being said, how are people supposed to reach out to you?
Oh, easy. We are on social media. We've got Wendell Mortgages. We've got Diana Lee Mortgages, the brokerage, the Mortgage Minds, at the Mortgage Minds, social media, Facebook. We definitely can drop our contact here. We can put it on the Facebook page, actually.
Yeah.
Perhaps underneath, we'll put our contact there. We have ourselves. This is our business. You can text us. You can call us. You can run any scenario by us. We are not high pressure sales, yet we know exactly what to do. But we're here together because we want the best advice for the client. So if it's a matter of a quick question and you're like, hey, I often get, hey, sorry to bug you, but I have a question. Don't be sorry. This is our job. We want to. We want to help others. We want to make sure we're all on that same team. So text, email, whatever works for you guys. We're pretty flexible. Yeah. Thank you. And I will put my info in here as well. But
Yeah.
yeah.
Reply to the comment on the Facebook page and the YouTube
Yes.
post afterwards with your contact info. That will
Sure.
be the
Yeah.
best.
Yeah.
Um, Thank you so much. For all of you that are watching right now, do know that we're going to be doing this in 2 more weeks, and it's going to be a 6-part series over a bi-weekly portion. So our next one is going to be on October 23rd, which is 2 weeks from today. Today is October 9th. And thank you so much to the Mortgage Minds, Diana and Megan, for being a part of this today. And we look forward to seeing you on the next Mortgage Minute. See you.
Thank you.